I couldn't decide when I was a kid if I wanted to be an astronaut or a geologist, so I became a rock star instead. My name is Victor Ashley, and I'm a real estate agent out of Seattle, Washington. You can reach me directly at 425-559-4590, and please leave a comment or subscribe if you're enjoying the channel. I've been covering the last couple of days the market analysis, how things have changed year over year in the Seattle area. And very specifically, I track 6 zip codes, and I've been tracking six zip codes for about 2 years now inside of the real estate market. So I'm just finishing up the other 5 that I just did, and today is the last one, and this is 98037. And if you don't know exactly where that is, I'm going to make you acquainted with it right now. So if you could see my screen, it's coming up right now. But this is the 98037 Lynnwood area, and this is located just east of Edmonds, south of Everett, west of Bothell and Mill Creek, as well as it's about 16 miles north of the Space Needle. So now you have a walk on basically of where things are at. This is also at the apex where both I-5 and I-405 meet each other. And not only that, but we also have 2 different weather patterns that hit at the exact same point. So not only do you have bad weather, but you have bad traffic, just so you're aware. So I went in and I pulled the zip codes. I pulled all the sales data for this zip code. And again, I'm pulled between the 1st and the 15th of this March and the 1st and 15th of last March. Now, sales data is about 30 days behind, just so you're aware. So the majority of time that if the house closed in that period of time, they more than likely accepted an offer between 30 and 45 days ahead of time. Now, something happened, and this is a little interesting because this is the only zip code where the sales data was almost the exact same year over year. Now, that's going to be really good for getting an apples to apples comparison, which we're about to do. But I also noticed that all the other zip codes except one had a decrease in sales. One zip code, and that's this one right here, that was the one I did yesterday. That's the 98087, also in Lynnwood. That one came up with, it was almost 150% more homes were sold this year than last year. All the other ones had about a 30% decrease of home sales. And this one, as you can tell, is the exact same. So let's get into it right now. So last year, between March 1st and March 15th, homes sold in that area averaged $909,000 with only 4.5 days on market, 3 beds, 2 bath, 1920 square feet. Now, when we compare it to this year, though, the average home being sold at that time, at this time, is 783,000, 48 days on market, 3 beds, 2 bath, and just under 2,000 square feet. So what that came out to when I averaged the 2 square footages together, just so we have a direct comparison, is 1944 square footage. I take that against our price per square foot, and this is what I came up with. Last year, the average home being sold, just using our comparison, was $950,000, and the mortgage at that time was $44.92 monthly, and that was only the principal and the interest, not including any kind of HOA, special assessments, or insurance. This year, though, something else happened, and let's take a quick moment to gander this. The prices went down, but the mortgages went up. And let's talk about that. Because when I averaged it, it was $797,000, and the mortgage was $5,108. And when we compare them together, that came out to $153,000 decrease. That was a 16% decrease year over year. But our mortgage increased 13.7%, and that was $616 more each month. So that's approximately $7,200 additional every single month for your mortgage. So what we're seeing here is cost affordability has been going And affordability is staying the exact same, even though the cost of the homes are going down, and that's because the interest rates are going up. Now, let's just say, hey, Victor, I'm getting priced out of the house right now. Let's just rent it instead. Well, the cost to rent versus the cost to buy right now is 151%. So that means if you are trying to buy this house instead of renting it, it's going to cost you 151% more, because rents right now in this area are $33.64. What does that mean, Victor? Well, that's right here. This next video that I'm going to link right here, we're going to actually be talking about that. And that is what happens if I bought a house in the last year or two and I need to actually rent it out now because there was some sort of life event and I actually need to move somewhere else. So just in conclusion, I want to thank you guys for watching my summary this week for the cost comparisons from this year to last year. As you can tell, Seattle's gone down on average about 12%, 14%, depending on how you roll those numbers together. And then at the same time, these numbers aren't 100% completed yet because March isn't over yet. And we're going to know approximately the second week of April when all the data comes out exactly where March sits. But from my math right now, it looks like we're going to have a year-over-year loss approaching 12%. So just be ready for that. And if you have any questions, feel free to drop a comment below, and I'll be happy to talk to you soon. And as always, I hope that you guys have a fantastic day, and I look forward to meeting you in the next video.